On a beautiful Vancouver day, it's easy to forget the financial clouds hanging over the world's economy. Compared to other nations, we may be doing well, but the financial road ahead is anything but smooth. People are keeping their wallets closed, even though around them the cranes downtown are a testament to a booming construction sector. BC's economy is expected to muddle through this year with 2% growth, but there are concerns.
We will see some growth in BC's economy, so I don't expect a recession. The risks lie outside of BC, the most prominent being the risks within Europe.
Even with all that uncertainty, don't expect Vancouver's real estate prices to drop anytime soon. Most economists expect interest rates to remain at rock-bottom levels for at least another 18 to 24 months. Recently, the Bank of Montreal moved its 5-year fixed mortgage to 2.99%, forcing others to follow.
For the most part, mortgage debt is good debt. It's debt backed by a solid asset.
Those cheap interest rates have led to ballooning household debt, making it the #1 risk to Canada's economy. The highest borrowers are British Columbians and Albertans. A new CIBC study shows that Canadians over 45 who should be saving for retirement are piling on debt far faster than any other segment of the population.
People use the equity on their house to actually build more debt, especially older people. They renovate their houses, therefore they take a second mortgage or a line of credit to finance that. In 2 years from now, if we see the same trend and actually this trend deteriorating, I will be very concerned.
The CIBC report says increased borrowing, particularly here in British Columbia, means consumers won't be the heavy drivers of economic growth. That will increasingly fall to private businesses in the province. BC's economic savior continues to be its resources and the near insatiable appetite for them in a booming Asia. In the past 2 years, we've shipped more raw logs to China than in the previous 20 years combined. In Kitimat, the construction of a new $4 billion pipeline continues. Once completed, natural gas will be loaded onto tankers and shipped to customers in China, Japan, and South Korea.